Good morning, viewers. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Tuesday, February 25th, 2025. This is Nelson John. Let's get started. Apple is making the biggest financial commitment yet, pledging over $500 billion in the US over the next 4 years. This investment will focus on AI, silicon engineering, software development, and R&D, creating over 20,000 new jobs. CEO Tim Cook called it a bold step for American innovation, reinforcing Apple's long-term commitment to domestic growth. A major part of this plan includes a new manufacturing facility in Houston, Texas, set to open in 2026. The site will assemble AI-focused servers, boosting both local employment and Apple's AI ambitions. Additionally, Apple is launching a manufacturing academy in Detroit, aiming to help businesses adopt advanced manufacturing techniques. Now, this announcement comes after Donald Trump's recent claim that Apple was planning to invest hundreds of billions of dollars in the US. His administration had pushed for local manufacturing with tariffs on Chinese imports. Currently, Apple's US supply chain spans 24 silicon facilities across 12 states, including Arizona and Oregon. This latest investment cements Apple's role in shaping the future of American tech and innovation. Mankind Pharma, India's fourth largest drug maker, is gearing up to enter the booming anti-obesity drug market, setting its sights on Semaglutide, the blockbuster diabetes and weight loss drug behind Ozempic and Wegovy, which loses its patent in early 2026. The company joins Dr. Reddy's, Natco Pharma, and Sun Pharma in the race to launch generic versions of GLP-1 drugs, a class of medicines reshaping obesity treatment, reports Jessica Jani. With demand outpacing supply and estimates pegging the GLP-1 drug market at $100 billion by 2030, Mankind is exploring partnerships and co-development strategies to break into this space. Senior President at Mankind Pharma, Atish Majumdar, believes obesity is a massive opportunity, and Mankind Pharma is keenly looking into it. Given the complexity of developing GLP-1s, most Indian firms, including Mankind, will likely rely on third-party collaborations for production while leveraging their marketing strength. Mankind has been shifting focus from acute therapies to chronic and specialty segments, expanding into cardiology, oncology, and now obesity. Its chronic therapy share has grown from 20.4% in FY15 to 35.5% in FY24. And recent acquisitions like Bharat Serums and Vaccines for 13,768 crore rupees reinforce the strategic pivot. With competition heating up, including Novo Nordisk and Eli Lilly planning India launches of their weight loss drugs, Mankind is betting on strong branding, doctor trust, and urban market expansion to stay ahead. If it successfully enters the GLP-1 space, it could unlock a new high-growth segment. Infosys, India's second-largest IT services company, is working ahead of schedule to extend and expand its $3 billion contract with German automaker Daimler. The company aims to add artificial intelligence tools into the deal, securing long-term revenue growth. Signed in December 2020, the 8-year contract, internally called Twice as Fast Program, covers network, security, data centers, workspace, and operations. Infosys earns about $400 million annually from this deal, with $160 million from data centers and $240 million from software and hardware services. Now, Infosys is negotiating an extension from 2028 to 2029, with AI as a key addition. Discussions are in early stages, but the deal is expected to be finalized next year. The AI component is expected to drive additional revenue, though specific figures remain undisclosed. Daimler, which split into Mercedes-Benz Group and Daimler Trucks in 2021, continues to work with Infosys. The contract is one of Infosys' largest alongside Apple and JP Morgan Chase. Infosys' manufacturing sector revenue has more than doubled since the Daimler partnership, from $1.3 billion in FY20 to $2.8 billion in FY24. This aligns with CEO Salil Parekh's strategy of securing high-value, long-term contracts. With AI transforming enterprise IT, industry experts believe Infosys is positioning itself to embed AI across major deals, as seen with TCS's $2.5 billion Aviva contract. As businesses double down on AI, Infosys' early renewal with Daimler signals a shift towards AI-driven IT services. State-run NTPC Limited and EDF India, a subsidiary of France's Electric de France EDF, have signed a non-binding term sheet to collaborate on pumped storage, hydro, and other renewable energy projects. The agreement, signed by EDF India's CEO and NTPC's hydro engineering GM, outlines plans for a 50-50 joint venture. The partnership aims to develop projects in India and neighboring countries, either independently or through existing joint ventures and subsidiaries. Given their expertise, NTPC and EDF are expected to accelerate India's renewable energy transition. NTPC, India's largest power producer, has an installed capacity of 77 gigawatts, with 29.5 gigawatts under construction, including 9.5 gigawatts from renewables. The company is targeting 60 gigawatts of renewable capacity by 2032. Last year, NTPC listed NTPC Green Energy Limited (NGEL) to boost investments in green hydrogen, methanol, and sustainable aviation fuel (SAF). In January, Prime Minister Narendra Modi laid down the foundation stone for India's largest green hydrogen hub in Pudimakada, Andhra Pradesh, developed jointly by NTPC Green Energy Limited and the Andhra Pradesh government. The project, part of the National Green Hydrogen Mission, is expected to attract 1.85 trillion rupees in investments, contributing to India's 500 gigawatt non-fossil energy target by 2030. This NTPC EDF alliance is a significant step in India's clean energy ambitions, leveraging international expertise to drive innovation and sustainability in the power sector. Now, here's some positive development for the New India Cooperative Bank depositors. The Reserve Bank of India has allowed depositors of New India Cooperative Bank to withdraw up to 25,000 rupees per account, providing relief after the central bank dissolved their lenders board over supervisory concerns. In a statement, the RBI said the decision follows a review of the bank's liquidity position, adding that more than 50% of the depositors can now withdraw their full balances, while others can access up to 25,000 rupees. Withdrawals will be facilitated through the bank's branches and ATMs effective Feb 27, 2025. As of March 31, 2024, the bank held 2,436.4 crore rupees in deposits, primarily fixed and savings accounts. Its loan book shrank by 11.7% to 1,174 crore rupees, and its capital adequacy ratio 9.1%, falling below the required 10% for the second consecutive year. RBI assured depositors that it's closely monitoring the situation and will take necessary steps in their interest. That's all for today. Thank you for joining in. We're eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a terrific Tuesday.